Welcome to Man in America. I'm your host, Seth Holhouse. So first off, today is going to be an audio-only interview. My guest actually doesn't do video interviews for his own protection, and he has his own reasons for that, which make perfect sense to me, considering he's in finance and investing in precious metals. So I want to protect him and protect his identity. But today I'll be joined by a guy named Eric Yeung, who I came across on Twitter, and I've been following what's happening, especially the last couple of months with the gold and silver markets, but really about the gold markets and the big moves happening with gold. The rumors of thousands of metric tons coming into the United States, the discussion of an audit of Fort Knox, discussion of potential revaluation of gold, what's it going to do to the gold price, what's happening to the London banking system, to the LBMA, which is the London Bullion Market Association, I believe, which is where a lot of the transactions are happening over there. And so we're going to be diving into a lot of this information. Now, this is going to be a very technical interview. And so if you're looking for a quick easy explanation of what's going on in 15 minutes, you're not going to find it here. But if you have the patience to go through, this will be about, I think it's about an hour and a half long interview. What it will do and what Eric does is break down exactly what's happening with the gold markets. And he actually presents a lot of very compelling evidence that points to a very significant shift in the financial system. And a lot of what he puts out, and again, a lot of this evidence, paints a picture of Trump initiating a massive shift in the global financial system. Now, a lot of this ties into the City of London and the central banking system, and really the system that has enslaved America ever since the Federal Reserve came in. And what I came to at the end of this interview, which I'll be playing with you, is an understanding of how President Trump could literally be severing us from the City of London's financial control. And that's the big thing here. Obviously, a lot of this ties into the manipulation of gold price and how are gold prices and silver prices manipulated through the paper promissory note market. And we're going to be getting into that. And so there's a lot of details like that explaining what the COMEX is. It's actually very helpful, a lot of very useful information that Eric presents. But to me, what's most important is the bigger picture that's painted, is that this financial system that's been enslaving America really for over 100 years, this financial system, it seems to be, is at its end. And a lot of the action, a lot of the movement of precious metals, a lot of the actions from these large banks, these central banks, indicates that there is a very coordinated strategy going on here to bring gold back into the United States while simultaneously destroying the London banking system, which we'll explain. And then at the end of that, then revaluing gold, which it's really a brilliant strategy. Like as my guests say, will point out, you could call it 5D chess. I mean, I think it's a very real 5D chess when you look at all the moving parts and where this could head into. So I think you're going to thoroughly enjoy this. Again, it is very technical, but I'm not a very technical person, and so I asked a lot of questions, and so I think that you'll be able to follow along in the same manner that I did. And I think Eric did a great job of not speaking to us as a financial trader or a financial expert, but in speaking to us as people that understand these things but still have a lot of questions and still don't grasp a lot of the very fundamental concepts of what drives the prices of gold and the different markets. And so this is, I think, hopefully a very helpful and educational interview for you. So please enjoy the show. Mr. Eric Yeung, it's great to have you on the show. Thank you so much for being with us today.
Thank you, Seth. It's a pleasure to be on your show. Thank you.
I first met you on Twitter, which is where I do a lot of my research, and that's also where I find a lot of experts. And I've been following precious metals for a long time. I used to be in the precious metals and jewelry and watch industry before, well, long before doing podcasting. So I've got a little bit of information about it, but I'm still learning so much. And obviously, for a lot of people that have been paying attention over the past 3 or 4 weeks, the topic of gold, paper gold, Fort Knox, why is gold flowing out of Europe into America? These have become very mainstream topics, and you're someone I came across in the past couple of weeks that I felt like, gosh, like you get it, and you're able to explain things in a way that doesn't make me feel like I know nothing about this. Because a lot of these experts are talking about the chart analysis and the if it breaks out of here, this is going to happen, and it's well over my head. So it's great to have someone like you that can help, I think, just make more sense of what's going on.
No worries, Seth. I can try my best to answer your questions.
Absolutely. So, I guess starting off, just give us a little bit of your background, just to get us going here.
Okay, so I was in the contract manufacturing business out of Hong Kong and China, southern China mainly, and I did it for over 20 years. So my customers are all over the world, basically. Um, the huge multinational companies that need manufacturing done to a certain specification, they come to me with the spec. I would, take the spec, design the product for them if need be, go to China, quote the prices of different factories to manufacture up to that spec, send it back to the customer. Customer approves it. I manufacture it with the factory. I arrange the logistics. So basically, I was the turnkey solution contract manufacturer for any sort of Western corporation that needs help to offshore their manufacturing in China.
And then how did you end up getting into finance from that?
Okay. So I was an avid tech investor actually back after the GFC, after 2000 the 2008 financial crisis. And as you know, the tech companies did have a pretty good run back then. So I made a lot of money. But then in 2018, there was a not as big of a bubble, I would say, as the tech in the US right now, but there was a bubble in the with the Chinese tech stocks. I was in it. I got out. That thing imploded, and I started looking at alternative investment ideas and came across precious metals, and that's how I got into it.
And so,
From that point on, yeah,
okay,
and and
and are
and
you
and the
advising?
fact that
Go ahead.
sorry,
Sorry.
go ahead. Yeah. I was just going to say that the fact that Donald Trump started his first term in 2016 and forced Jay Powell to pivot, if you recall, with the interest rate keeping it at a parity and then cutting interest rate, that was when I made the decision to focus on precious metals.
I see. I see.
Yes.
And so, with what we've got going on here, and there's a handful of topics that I'd like to discuss with you to help people understand. But so, what started out with the news, I think this is probably early January, mid January, about the Bank of England going from, say, a 3 day delivery for physical gold to a 4 to 8 week delivery, which got a lot of people concerned about whether the gold was still there, whether they could fulfill those contracts. And that often, if you look at the same thing in a banking industry, right, which is fractional reserve, meaning that the bank only has to hold a fraction of the money you put into it. The idea of the bank run is which we saw a little bit happening back with Silicon Valley Bank, back when that bank collapsed. People, going to get their money out and realizing, oh, like, the money's not there, basically, and going back into the scenes that a lot of us have seen in It's a Wonderful Life when there's the bank run, everyone comes to get their money, but there's no money there anymore. So there's been a lot of people discussing is could that be happening to the precious metals industry? And so before we get into the topic of why the gold might be coming to America, what's happening with the LBMA, and some of those topics, can we first talk about what it means to be the gold paper market versus the physical market, because this is something that's taken me a lot of different interviews and research to start to understand. If you look at the value of precious metals, and there's been a lot of different discussion about how the price is being suppressed. And I've heard a lot of experts that say, oh, silver should be at 300 an ounce, silver should be at 500 an ounce, gold should be at 20,000 ounce or whatever it is, but they're saying it's being suppressed through the flooding of the market with the paper silver instead of the real silver, which manipulates the supply and demand. But so can you just explain to me and the audience, just as if we're learning for the first time, what does it mean when someone talks about paper gold or paper silver, and how does that affect the actual market value of those metals?
So that's a very good question, Seth. The Western gold and silver market is a predominantly paper and partially physical. Why do I say that? Both the LBMA and the COMEX.
And so explain
First of all,
what are the
they work.
LBMA and the COMEX for people listening?
Okay. The LBMA is London Bullion Market Association. And what it is an OTC market, okay, over the counter. What that means is that it's not an exchange, it's an association. What it does is it have a bunch of rules that it give these members to abide by when they do these OTC transactions by themselves. So it's not exactly an exchange, but it does implement some rules on its members. That's what it does. The COMEX, on the other hand, is an exchange. It's a futures exchange. So you have futures contracts, like for example, for gold right now, you have the February contract, which is expiring. Today is the last delivery date for the February contract. And then you have the March contract, April contract. Sometimes it skips a month, but you get my point, right? It's a futures market. And you might think that's pure paper. No. At the COMEX, you can also take physical delivery and withdraw the metal from the exchange.
So futures being, let's say gold is, hypothetically, let's just say that gold is $3,000 right now an ounce for just an even number. So futures would be, I'm placing a bet on the future of this gold. So I might be, say, placing a short bet saying that I think that gold will be worth 2,500 in 1 month, or I might be saying I think gold will be worth 3,500 in 1 month, and I'm kind of betting accordingly. Is that a way to understand that? What the futures market means?
Well, you can think of it that way, but the original idea of a futures market is that you're buying a contract for something that is going to be delivered in the future. So it's like a forwards contract.
I
Um,
see.
let's say you're a producer of grain, let's say, right? I don't know if grain is on the COMEX, but let's say you're a producer and you want to sell the grain that you produce 3 months down the road, then you would put up a futures contract 3 months down the road and you deliver 3 months down the road. Does
I
that
see.
make sense there, right?
Yeah. So
But so
basically,
that's
like,
why
so
I
say
say
I'm.
it's partial physical,
I
partial
see.
paper,
I
right?
see.
Yeah,
So with
because
grain,
most
for
people would
instance,
just, sorry, go ahead.
I was just
Yeah.
say, okay, make sure I'm keeping up. So with grain, I'm a producer, and I know that my grain's going to be delivered in 3 months, and so I will sell a futures
Yes.
contract saying, "Look, I will sell it to you today for $50 a bushel, and I'll be delivering it in 3 months." Now, if for some reason there's a drought and grain prices go up to $100 a bushel, I've sold it at 50 a bushel, so I can't change that. But if grain goes down to, say, $25 a bushel in 3 months, I'm still selling it at $50 a bushel, and so I'll make more money that way. Is that more so pretty in line with how it works?
Yes, but you can also at the COMEX, you can also buy and sell these contracts without ever delivering
I
the
see.
actual grain. If both parties decide to close the contracts by cash. And Um, that's what they call the EFP mechanism, which is its full name is exchange for physical, which is misleading because, like I just said, there can be two parties negotiating off the exchange by cash settlement.
I see. So this is
Yeah.
it almost like what we're looking into here is the kind of the beginnings of like the derivatives market, right? Which is a massive, massive multi-trillion dollar market, which is kind of placing it's almost like betting and on trades and trading on bets to the nth degree, right? Reminds me of that scene in The Big Short where they're explaining it in the casino. And someone says that they make a bet, and then someone else makes a bet on that bet, and they make a bet on that bet. So then it can kind of go almost endlessly, right?
Yes, correct.
Okay. Okay.
It
So
can be a
you
pure
continue.
pure paper bet if you settle through EFP by cash, or you can stand for delivery, and then you can withdraw the physical commodity. So it can be both. So the problem that happened recently, like starting at the end of December, right after, sorry, the beginning of December, right after Donald Trump was elected, um, was that there were a bunch of really big physical gold buyers at the COMEX who were standing for physical gold delivery. So this is out of the ordinary because in the past, before the beginning of December of 2024, most of these gold contracts, futures contracts at the COMEX were cash settled by the EFP mechanism
Ah,
that I
okay.
just explained to you. So all of a sudden, somebody is saying, "I don't want the cash. I want the actual thing to be delivered," and that like started, um, basically all the commotion that is going on right now. And to give you an idea of how much gold was imported into the US. Now, this number that I got right now is from StoneX and Bullion Vault. These two companies are both LBMA members, and StoneX is actually a participant at the LBMA gold price fix. So the LBMA fixes the gold price two times a day, at the AM and at the PM, and StoneX is a participant of that. So what the number I'm about to give you has credibility because these guys are insiders of this entire system. So they said that starting at the beginning of December till now, pretty much now, the US imported 2,000 metric tons of physical gold into the country. Now, just to give you context, normally in the past, 2023, the US imported around 350 tons of physical
Wow.
gold.
So
So
2,000 metric tons
in 2.5 months
in two and a
versus
half
normally
months.
they do um like in 2.5 months um they did 2,000 metric tons, and normally they do 350 tons in a year. So somebody said it's around 15 times. I don't have a calculator in front of me, but it's a lot compared to what they normally do.
Okay, and that's a huge amount, kind of value, right? So I'm just doing some calculations. So at say just under say at 2,900 per troy ounce, that's I mean it's you're approaching $200 billion worth of gold at 2,000
Oh,
metric tons.
2,000 metric tons, right?
Yeah, so that
I,
gosh,
I
so
don't
near
have
almost a
the,
$250 billion worth of gold.
yeah, um, I think you're right, Seth, because I was calculating how much gold Warren Buffett can buy with his cash position, and it's a little bit over what you just said. Yeah, it's around there. You're correct. So it's a
Okay.
lot, right? And out of that 2,000 that StoneX and Bullion Vault said that the US imported, we know for sure that approximately 700 metric tons was imported by the COMEX, because we see that at the COMEX vote numbers. Okay, so those numbers are public. We can see that 700 metric tons came through the COMEX, and let's say 1,300 metric tons came in from OTC, which is over the counter.
Okay, that makes sense.
So that's what happened, right? And like I said, normally a lot of this is paper settled. All of a sudden, these guys, wanted all this gold physically. Now the OTC market is opaque. We don't see the details. They don't have no obligation to release any of the details to the public. But at the COMEX, we can see that the buyers and sellers of the physical metal, and it's just the usual suspects. It's JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, Barclays, HSBC, and they are on both sides of the trade. So we know these bullion banks are the ones who are doing this. Now, who are the biggest net importers? We don't know, because that information, you see the in and out, but there can be things that happen behind the scenes that we don't know about. So we know that all these bullion banks are involved, but we don't know which are the ones who are actually net importing. Okay, like for example, I have a list from James Anderson. He's an analyst of precious metals at SD Bullion, and it shows you which bullion bank is doing it for their house account or for their customer account. But the problem is, when they say it's their house account, do you believe them? It's for themselves and not acting on behalf of a customer, for example.
I see. So it's
right?
the big
We don't know
banks
that, right? So
filling their vaults, which is also interesting because on February 20th, Jamie Dimon sold almost 800,000 shares of JP Morgan, which was about $250 million, right? $233 million worth of his shares, which is just interesting timing that Dimon's dumping his JP Morgan shares. I think Berkshire Hathaway has, from my understanding, the largest cash position they've ever held. So what we're seeing is more these bigger banks and these bigger players moving out of, let's say, the paper market into the physical, and moving out of the stock market into, I'm not sure, what Jamie did with his proceeds, but these are some big shifts happening from the major players that they see things that we never see. Like we'll see them a year after they see them. So it's just interesting timing of all this.
So I'm going to tie this in with we have been talking about the COMEX. I'm going to tie this in with the LBMA.
Okay.
Why the two places are connected. So, like I said, all these bullion banks are importing physical gold, and they're receiving this physical gold by delivery at the COMEX vaults. We see those numbers. So how does that connect with the LBMA? Well, like I said, Seth, there's this thing called the EFP mechanism. And like I said, don't let the name deceive you, because a lot of it in the past was paper to paper, right? I said that. But in this particular case, because of the huge physical demand from these bullion banks who are standing for physical delivery, the bullion banks are actually taking metal out of the LBMA and delivering it to the COMEX. So remember the 700 metric tons that I talked about? that came
Yes,
into the COMEX. Most of that was from the LBMA
I see.
because we know the numbers. We know the numbers. Like Reuters came out with an article at the end of January saying that the LBMA exported approximately 400 metric tons of um, physical gold to the COMEX. So if we just add another 20 days, it's pretty close to it might not be 700, it might be 600, but we're getting there. So most of that is from the COMEX. And because of that huge demand, like you said earlier, the LBMA delivery time went from 3 days to a month or 2 months. So that's essentially what happened.
I see. So all of this movement that's happening, all this, this shuffling of capital that's happening at the very high level. Now, I also know that the American retail market is very different from the Asian retail market. I used to spend quite a lot of time over in Hong Kong, and actually selling mostly diamonds and jewelry, but also precious metals into the Asian market. And they, whether it's Indians or Indonesians or people from Singapore, China, Hong Kong, they view gold very differently than the Western market does. Like almost every family will have, it's part of the wedding dowry, right? They'll have 24 karat or 23 karat gold necklaces, and it's a big part of their culture that's been stripped away in America. And really, the only big purchase like that in America is what we've been sold as the diamond, right? The diamond is forever, and people, I used to buy diamonds from people that they'd buy all these investment grade diamonds. They'd lose half their or two-thirds of their money on, because the diamond market, it's a racket, right? To kind of simplify it. Um, so, but what do you think these people know? What do you think would cause somebody to say exit the cash settlements and say, look, instead of taking $100 million in cash for this deal, I want $100 million in bullion? Why the big shift after Trump getting in to everyone now taking physical delivery and almost, you could say, scrambling to fill their own vaults with gold?
Very, very good question, Seth. But before we go there, let me give you some background on the cash settlement, like the EFP mechanism that we just talked about. Why the banks did that in the past? Like why there's so many EFPs flying around? Well, the bullion banks traditionally in the past, for decades, they traded this thing called the EFP trading pair. So what that is they would short the COMEX futures market for gold, and they would long the LBMA, what they call paper gold promissory note market. They used to call it physical, but it's not because they can't deliver right now, right? It's T plus 30, T plus 60. So I call it the paper gold promissory note market. So they would short the COMEX, they would long the LBMA. And then normally there would be a what they call a positive EFP spread. What that means is that the price of the promissory note of gold at the LBMA would trade at a high price versus the price of the gold futures contract equivalent, which is basically the current month at the COMEX. So do you see how that works? It's like an arbitrage, right? Because you have two places with different prices.
I
So they
see.
play that, and they were making money, and they would make a lot of money because remember when you asked me like about the paper market versus physical, some estimates that said from experts, because this, of course, the ratio changes, depending on the time period, right? But at the craziest of times, the ratio can be up to several hundred paper contracts versus one physical at the LBMA.
With the stock market at record highs, are you confident your portfolio can weather the next big downturn? Market corrections are quick and unforgiving, wiping out hard earned gains in an instant. Smart investors know the key to financial security is diversification. That's why Noble Gold Investments makes it easy for Americans to hedge market volatility and protect their wealth with gold. Since 2010, central banks have steadily increased their gold reserves, and in 2024, gold prices soared over 25%. Gold is simple. You buy it, you own it, you control it. With over $2 billion in precious metals sales, Noble Gold Investments has helped thousands of investors diversify their portfolios with gold IRAs and physical gold. And now, when you open a qualified account, Noble Gold will gift you 2 5-ounce silver America the Beautiful coins as a thank you. So, folks, don't wait for the next downturn to catch you off guard. Visit goldwithseth.com or call 626 654 1906 today and see how easy it is to incorporate gold into your investment strategies. So, again, that's goldwithseth.com or 626 654 1906.
And the most conservative estimate of paper to physical at the COMEX that I've heard is 10-1. So my point is, you see how big this EFP trade is, right? The paper trade, the arbitrage.
So basically, let's just say it's 1 to 100, right? That
At the LBMA, let's just say 1 to 100 at the LBMA.
Yes.
We use that as a model, and 1 to 10 at the COMEX, right? So it's a huge trade that is pure paper, not physical. In the past, okay, like before the events that started when Trump got elected, that was the norm. And then what did we say? Trump got elected. All of a sudden, there were these bullion banks. They don't want to do this paper anymore. They want the physical metal. That's what happened. It's a fact. We're seeing that still right now. So what happened? All of a sudden, because of the demand at the COMEX price for the current month contract became substantially higher than the price of the promissory gold promissory note at the LBMA. So that arbitrage reversed. It became negative, that spread, the EFP spread. Do you have a question for me at this point?
No, I'm processing all of this
step by step here.
No, this is great. This is great because this is all
okay.
This is really helpful, and I think I'm really lucky that I get a chance just to ask all these questions because I see all this
no problem
information, and so basically
because I'm trying to explain it step by step.
Yes.
Now for you, okay. So that you understand what's going on, like the history, and then we go forward to what's going on right now, right? But like, yeah, please ask me the question.
Sorry, no, I think I'm following. So basically, this price reversed where before
reversed because of the huge demand.
So the shorter futures contracts used to be worth less at the COMEX than the the paper promissory note long positions that were at the LBMA. So, but now,
correct,
because everyone is starting to demand physical delivery instead of cash settlement
at the COMEX
for the futures contracts. What's happened is now the futures contracts have reversed, and now they're more valuable than the promissory notes over in the LBMA.
Yes.
Okay.
So this is like, we're talking about what happened primarily in the last 2.5 months, not counting today and yesterday. Okay. We're going to get to today and yesterday. What happened? Because the gold price, as we're talking, the gold price is dumping, right? So something new happened, but we're focusing on what happened right now. Right now, we're focusing on what happened in the last 2.5 months, excluding what happened in the last 2 days. Okay. So let's stick to that. Okay.
Okay.
So where we are right now is yes, the promissory note at the LBMA all of a sudden, because of the demand at the COMEX, is worth less than the futures contract of the current month at the COMEX. So these bullion banks are losing money. because their trade is arbitrage, right? Is to short the COMEX and long the LBMA. So if all of a sudden the COMEX contract price is more expensive than the equivalent LBMA contract price, they're losing money. See that?
Yes.
And they lost a lot of money in like on paper, in the last 2.5 months. So why is that important? Because that kicked off what I called a EFP doom loop. I coined that term, okay? EFP doom loop. Why do I say that? Well, remember, Seth, if you're a bullion bank and you're holding this promissory note at the LBMA, and the price of your promissory notes is dropping because before it was T plus 3, like you said, 3 days. Now it's T plus 30 or 60. Your paper promissory note is dropping in price because it's no longer the original contract that you bought in real terms, right? Because originally you bought a contract for immediate delivery in 3 days. All of a sudden, your seller is saying you might get it in 30 days, you might get it in 60 days, you might not even get it in 60 days. So what happens to the paper that you're holding? It's plummeting in price. Make sense?
Yes.
So on top of the arbitrage that just based on the supply and demand from the COMEX making that spread, your paper is even losing more money. So what happened? Well, people rushed in to try to get even more physical gold at the LBMA. Because if you don't just do paper and paper settlement and you get the actual physical, the physical gold didn't lose any value. It's only the paper promissory note that is plummeting. Does this part make sense?
Yes.
Yes.
Well, because
So
no one trusts
everybody's
it anymore,
lining up,
right? Because no one trusts the paper.
No,
the
no, 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 no,
promissory
no, no,
note.
no, 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 no. It's yes, nobody trusts it. Yes, you're right. Nobody trusts the promissory note. Therefore, the promissory note is dropping in value, and therefore, as a holder of the promissory notes, if you have connections, now this is just speculation on my part, right? And you can skip the queue, or you can actually, you know for sure that you get the gold in 30 or 60 days. You want the physical gold because the physical gold didn't drop in value. Does that part make any sense?
Yes.
So more and more people, it's the doom loop, right? Because of the original conditions that I outlined to you, more and more people want to stand for physical gold delivery at the LBMA. Therefore, the crisis deepens. They simply cannot get the physical gold. As a matter of fact, a lot of industry experts, like George Fair from Scottsdale Mint, he noted that the Swiss refineries are already fully booked for the entire year. So they cannot do the additional, they cannot deal with the additional gold demand from the LBMA right now. So what did Bloomberg say just half a month ago? It reported that actually it's both Bloomberg and Reuters reported this, that the LBMA and the Bank of England is urging its LBMA members to ask foreign central banks to let them borrow gold to deliver. So foreign central banks in this trade is the backstop because there's no more free floating gold at the LBMA for delivery.
I see. Okay. Yep, makes sense. So
Okay, so this part makes sense, right?
the inventory that was normally there for your typical daily trading is now sucked dry, and so
Gone.
now the LBMA
Gone.
is saying, why don't you go ask these big foreign banks or central banks and try to borrow from them to bring gold back into the LBMA. Is that correct?
Correct.
Okay.
So the central banks gold, like they actually at the Bank of England. Like the Bank of England vaults are the LBMA vaults. It's the same vault where they keep the gold. It's just that there's what we call unallocated gold and allocated gold. Unallocated gold is gold that basically you store at the Bank of England, and they like the contract might say you get it back in 10 years, but in that 10 years, the Bank of England can do whatever with your gold as long as they return the same weight and purity of gold to you in 10 years.
Makes sense. Okay.
Makes sense? And the central bank's gold that I'm talking about right now, they are the allocated gold. So allocated gold means that they all have serial numbers, they all recorded. So you can't the LBMA cannot touch it. That's why they have to beg the foreign central banks to release this gold into unallocated so that they can ship it to the US.
Okay, that all makes sense. Okay, I'm with you.
That all makes sense. You with me? So that part is the doom loop, right? And more people, like I said, are standing for delivery, and they are now begging foreign central banks to release the gold to ship to the US. So looping back to your original question, you asked me who I think the big buyers are. You see that all this is creating a crisis at the LBMA, right? I mean, the LBMA had to host a webinar on the internet to explain why they have this shortage and crisis. And they said a lot of stupid things, like I can't believe they said it, but they said gold weight is pretty heavy. That's the reason of delays. They're saying that gold is heavy. I'm not kidding you, Seth. They said it. And then they said that the trolleys are difficult to operate at the LBMA.
Bogus
So
excuses.
as you can see, so all these excuses, which are ridiculous, right? And basically, the way I see it is that the gold buyers at the COMEX, which are, by the way, like I said, bullion banks, they are hanging the LBMA out to dry. It doesn't make any sense because the LBMA composed of members who are these very same bullion banks. Does that part make any sense? It's the same people. There's a group of bullion banks that makes up the LBMA, and there are others too, right? But the big boys at the LBMA are the JP Morgan, Goldman Sachs, HSBC, Standard Chartered, Bank of America, etc.
So
you ask yourself, why is this happening? Why is this happening? It doesn't make any sense, right?
I think I heard you in one of your other interviews. You refer this as almost like a public execution of some part of this system.
Well, now you hear my detailed explanation, isn't it? It doesn't make any sense, right? It's the LBMA consists of these same guys who are publicly executing the LBMA at the COMEX. So none of this make any sense. So my thesis is that there must be an external force right now that is asking some of these bullion banks to stand for physical gold delivery at the COMEX that started this doom loop at the LBMA and the COMEX, EFP, right? Doom loop. And based on what we know, with recent announcements of Donald Trump saying that his administration wants to audit Fort Knox, and the fact that Julie Shelton, who is very close to the Trump administration, has been saying that she's proposing that the US government put physical gold into long duration US Treasury bonds. Doesn't it make sense that the external force that is asking some of these bullion banks to take huge physical gold deliveries at the COMEX Doesn't it make sense that this external force might be Uncle Sam, might be the US government doing it? Because like you said, it's a lot of money too, right? $200 billion, something like that. You calculated it.
So yeah, I mean, it seemed like it would have to be something coordinated to do this because
Yes. Yes.
if I'm not mistaken, these same bullion banks, by playing both systems, right? What you've explained is that the same banks are taking, demanding physical delivery, at the COMEX, are the same banks that were heavily, central to the operations of the LBMA. So they, in essence, there must be something that's driving this, because I imagine that these big bullion banks have made money off of the fact that they can manipulate both markets, but that's coming
Yes.
to an end. So something is shifting here.
Well, they don't call it manipulation in the past, but it is, right? Obviously, but they call it legitimate hedging, or like you can call it like an arbitrage trade, right? They would have huge concentrated short positions at the COMEX, and then they would have the equivalent long position at the LBMA, like I said, and it worked. It's basically like skimming off the top. You know what that means, right? Skimming off the top.
Yeah.
That's what this is. That's what they did for the longest time until it doesn't work anymore because some of the bullion banks, out of their ranks, decided to say, I want the physical gold. The music has stopped. I don't
So
know if you've seen that movie, The Margin Call. Have you seen that movie with Jeremy Irons?
yes,
You
gosh,
recall, right? Remember that scene where, basically he said the music stops here because they were trading CDOs and it's buying and selling continuously, right? CDOs. And they saw the crisis that is brewing with the subprime market. So they were the first bank that stopped. They did sell orders only, no buying. This is kind of like reverse of that. It's buy physical only, no selling
so looking
from
at
these bullion banks, right? Kind of, right? You see the situation? Yeah.
absolutely. So help me make sense of this though, is that obviously you can see how there
Mm.
an ounce of gold is a truly it's a commodity. It's like a barrel of oil. You can't magically make 1,000,000 ounces of gold appear. You can magically make 1,000,000 ounces of paper contracts appear, right? That's the thing with the derivatives,
Yes.
is that
Yes.
you can just sit like on a keyboard and just keep hitting a zero until you get to $1 trillion if you want to, if you can convince enough people and banks to kind of buy into it, right? Which is that's why we have this 100 trillion dollar plus derivatives market. But if considering that physical gold is truly a limited resource, um, and now you have all this huge shift in taking delivery of the physical gold. Why is it that gold has still been bumping up against $3,000 an ounce, and even today it's down, a little over 1%? Why? Like, because again, from my thinking, it's like, well, it seems like the whole paper market is starting to crack, and if more and more people are rushing in to get to physical. I know that there's a lot of retailers, especially retailers over in Asia, that are running out. They no longer have 1 ounce bars, or or 100 gram bars or whatever. So how is it that the gold price isn't just going up because of this?
Okay. That's a good question, right? So I use an analogy. It's actually on my X account. I posted a fire engine, like these fire trucks, right? That firemen ride, firemen, like people who put out fires, right? And on the fire truck, you have a bunch of clowns. And I call that the LBMA Fire Brigade. Why do I say that? Because that's exactly how the LBMA works. They have a thin layer of gold and silver, physical. And whenever there's a fire, whenever the price wants to go up, they would deliver that physical gold and silver. They do that anyway, right? But they would use a hose and they will hose it down with paper. What I mean by that is right now, I think what they're doing, now this is speculation because I don't have real-time data on the situation, right? But what they're probably doing is that they're flooding the market with paper at the COMEX and also at the LBMA. And also at the same time, I don't want to dismiss this completely. During this run-up, there were a lot of CTAs, like managed money, like CTAs, commodity trading advisors, that basically handle clients' money, managed money, right? And managed money primarily composed of high net worth individuals, family offices, institutions, and hedge funds. So they would use these CTAs to help them trade paper, gold, and silver on the COMEX. These guys, I believe, are net long in the last 2 months. Makes sense, right? Because they trade by momentum, and the gold price, silver price was going up. So I think what happened is that a lot of them are taking profit, and at the same time, the bullion bank saw the opportunity to use this. They saw maybe the momentum has changed, and they are taking the opportunity to flood the market with more paper, and at the same time, they're rinsing these CTAs and hedge funds. So that's exactly what is happening right now. But I tell you, Seth, there's a really strange phenomenon that is occurring right now from this. Okay, remember what I told you about the LBMA paper gold promissory note versus the COMEX futures contract?
Yes.
Well, right now, because of what's happening at the LBMA contracts are all forward contracts. Like they're basically promises of a piece of gold or a bunch of gold that you might get or you might not get. But the price of the gold at the COMEX so far, right? Because they abide by COMEX rules and they have, like I said, last delivery day, first delivery day, so they have to abide by these rules. Those are essentially spot gold because you get your gold for sure, real time, right? At the COMEX. But guess what? Remember that doom loop I was talking about? I think at the highest point of negative spread, these bullion banks or whoever is trading these EFP pairs, they were losing $60. I heard 80, but let's just take 60. They were losing $60 per pair of like this EFP pair. And now I just checked this morning, it's positive 20, let's just say $25 because it fluctuates, right? With the futures price. And also the LBMA AM PM fixed price, right? Off gold. So right now, let's say it's positive 20 to $30. So you know what that means, Seth? It means that they are telling you that their crappy promissory note at the LBMA that might not get you the gold, you might or might not get the gold in 30 days or 60 days, is worth more than the physical gold that you get at the COMEX. Does that make any sense to you? And on top of that, the LBMA don't have any readily available gold for delivery, right? Even though they say, if you go on the LBMA website, they say they have 8,000 plus, 8,000 tons plus of gold. But obviously they don't have it because they can't deliver. Whereas at the COMEX, there's almost 1,000, I believe even slightly more now, 1,000 metric tons of gold at the COMEX right now. So they're telling you that the exchange with 1,000 tons of gold ready to deliver, the price of their current month contract is worth less than the LBMA where there's no gold and you might or might not get it in 30 to 60 days.
So that doesn't make sense at all.
You see how crazy that is? Yeah, because like I think that's first of all, I think that's temporary, and second, that shows you how bad the how crazy the paper manipulation is. I mean,
So
what more proof do you want from me, right? It's right there. Yeah.
so looking at the
Sorry.
analogy
Yeah.
of the fire truck, where the LBMA
Yes.
is, they see a fire, right? The fire is gold kind of breaking out, right? Everyone's not wanting it.
Yes.
They see there's almost like they see the early stages of what we'd look at as like a bank run, right? There's a run on physical gold
Yes.
where
Everybody
gold,
wants gold. Yes.
exactly.
Yes.
And so they
Physical
then
gold.
use their fire hose full of these promissory paper notes,
Paper.
right?
Yes.
To dilute the market, flood it with, this perceived, there's a lot more gold than there really is, right? Through these
Correct.
phony paper contracts. But what
Yes.
happens when A, they run out of water, or they run out of that, or B, when everyone realizes that the water is not even real water, it's just air that they're blowing at things.
Well, I'm going to get into something that's my pure speculation, educated speculation, by the way, based on all you see. I'm not lacking any evidence because I got tons of evidence, right, from what I'm seeing right now. But what I think is happening is that this is a bunch of bullion banks versus another bunch of bullion banks. So this is not, small investors like me and you or a family office versus the bullion banks because the small investors they're getting rinsed right now at the COMEX, like the CTAs, right? The people who manage their money, the CTAs are getting rinsed. So this is bullion bank versus bullion bank, and we go back to your original question: who's behind these bullion banks that is compelling them to like basically dislocate themselves from their normal methods of operation into doing this to essentially, I would say, almost in this, in reality, they're destroying the LBMA. Why would they do that? Like I said, going back to what I said, I think it's Uncle Sam pushing them to do this. The U.S. want to repatriate gold back into U.S. jurisdiction, and that's why you see all these strange phenomenons that are going on.
And so, why do you think the U.S. is repatriating all this gold? And how does this, like, so what I'm seeing right now is there's this frantic battle going on, you could say. And the LBMA seems like it's fighting for its survival, like it's under attack. It's being drained of its own blood. And so it's being drained by Uncle Sam, right? Kind of following this logic.
Yes,
So
yes.
what happens when all that blood is drained out and everyone knows it's dead because the illusion's gone? What happens, and why would the US government be doing this? And what would their end goal be for doing this?
Eventually, I believe that the LBMA paper promissory note contracts, instead of having a premium like right now today, will be in humongous discount, like maybe even exceeding 5% discount. And when it does that, eventually people will stop um, going to the LBMA because if it's at a 5%, 10% discount, there's a possibility that if you're not well connected, you're not going to get your physical gold. Like they might actually do a technical default, meaning that only people who are connected, bullion banks, can get delivery of their physical gold. Whereas if you are not connected, you go to the LBMA, you might be deferred 6 months to a year, which is essentially just basically telling you to go somewhere else if you're a business and you need the physical gold. That's
I see. And so
yeah.
numbers don't lie. The impact that Balance of Nature makes every single day is astounding. You can see the numbers for yourself at their website, balanceofnature.com. So listen to these stats concerning Balance of Nature's worldwide success. More than 1,000 success stories are reported each month, hundreds of thousands of customers worldwide, millions of orders delivered each year, and billions, yes, billions of fruits and veggie supplements consumed by people who've decided to start living better. There's only one number missing. That's you. Do what I did and add yourself to these numbers. Start taking Balance of Nature's whole food supplements, like so many others around the world. Here's another number that should get your attention: 35%. Use my discount code Seth to get 35% off plus free shipping and their money back guarantee. You must use my discount code Seth. So call them at 800-2468-751 and use the discount code Seth, or order online at balanceofnature.com. Use discount code Seth to get 35% off plus free shipping. I mean, looking at this geopolitically, and this is, and I venture into, with a lot of my kind of discussions and research, a lot more things that people may refer to as conspiratorial, but a lot less these days, right? Was now that all the conspiracy theories are proving true. Do you think that, obviously we saw this huge shift when after Trump won the election, and especially once he got into office, this activity accelerated. We know that the City of London banking system, the Federal Reserve, they have, in a lot of ways, managed to enslave the borrowers, right? It's the whole system of usury, right? That they've built this system of kind of unlimited money printing, et cetera. A lot of it is rooted in the City of London and the financial system there. Do you think that part of what we're seeing on a much bigger picture is the United States, or really Trump and what he's doing, breaking away from that system and breaking that system in the process?
I really think so, Seth. I think that the US, like it or not, always worked in partnership with the UK, with the City of London. But the City of London, the British, they're not very good allies. What I mean by that is they would say one thing, but they would do another. They would do another thing behind the scenes to undermine American interests. Like, look at what's happening at the Ukraine right now. The British government is doing something that is completely opposite of what the Trump administration wants to do. They want to continue this war indefinitely. They want to escalate it. So I think the breaking of the LBMA and the BOE is part of that. And I think Donald Trump and Scott Bessent wants to bring back the pricing power of physical gold back to the US completely without interference from the City of London. And that is the reason, most likely, that that they're doing this public executions of the LBMA. And may I add, Seth, why do I keep saying that it's a public execution? I explained to you the mechanics of it, but let me explain a little bit more. If these big gold buyers, these big bullion banks, let's say they didn't buy the gold through the COMEX, they bought it directly at the LBMA, then what would happen? Their buying wouldn't affect the COMEX gold price, would it? Because they didn't buy it at the COMEX. They bought it at the LBMA. So what I'm saying is that they could have bought the physical gold discreetly without going through the COMEX to blow up the EFP mechanism for the entire world to see. But they chose to do that. Why is that? And then mainstream experts are telling me that this enormous gold buying is all about the potential Trump tariffs on Canada and the and Mexico. I have two questions for them. Number one, why is it that this huge gold buying started almost a month and a half, almost 2 months actually, before Trump announced the tariffs, potential tariffs on Mexico and Canada? Like I said, it started at the end of the beginning, sorry, of December. So that's almost 2 months before Trump announced the tariffs on Mexico and Canada. Why is that? So that's suspicious. It doesn't make any sense. Somebody, I consider that person a LBMA show, told me that the market front runs policy. Really? I mean, like it wasn't even decided at that point. Donald Trump hasn't been inaugurated yet as president. So anyway, that's point number one. Point number two is, Seth, guess how much physical gold the US normally import from Mexico and Canada? Take a wild guess.
A wild
No idea?
guess. I mean,
A wild guess.
maybe what, a couple hundred tons a year?
No, no, way less. 120 tons approximately in 2023. So you see the dislocate here?
Yeah, it doesn't make sense because
I mean, it
like
doesn't make sense
tariffs
if
on
it's
them
tariffs.
wouldn't.
Why would they import 2,000 metric tons of gold to cover 120, 120 from that they normally import from US, from Canada and Mexico? It doesn't make any sense, right? If you're covering for, let's say, all that gold from Mexico and Canada no longer is flowing into the US, right? So you have a deficit of 120 metric tons. But you're importing 2,000 tons to cover for that 120 tons deficit. It doesn't make any sense. Even let's say let's say somebody who don't believe in the 2,000 tons figure, which I think is very funny because like I said, the StoneX and Bullion Vaults are very reputable players in this industry who are LBMA members. So, but let's say we don't take that number. We take 700 tons of imports from the COMEX, and we add, let's say, just 300 tons on top of that, because there is OTC import that exists. So let's say it's 1,000 in the last 2.5 months. So that's 1,000 metric tons of physical gold imports to cover for a potential deficit, might not even happen, of 120 metric tons of combined gold imports from Mexico and Canada. Does that make any sense to you?
No, not at all.
The arithmetic? So, in my opinion, that narrative is just to confuse us, to mislead us. It doesn't make any sense. So, like I said, I go back every single turn I make. I eventually go back to the US government being the big gold buyer behind the scenes, who is telling these US bullion banks to do this. Every single, sorry, go ahead.
Oh, okay. So would you say that
Yeah.
we'll call it manipulation for conversation's sake. So would you say that the manipulation of the gold price, which really, I like the fire truck analogy, right? The fire truck is the tool they use to manipulate the gold price and to keep it down. So if that fire truck, if Trump, does a drone strike on the fire truck, and the fire truck is no longer available to do that, and no longer able to flood the market with paper promissory notes as a way of suppressing the gold price, if that mechanism breaks, which it would make sense that the US government would want to have as much gold as possible back on American soil before that mechanism breaks. What
Yes,
then
so you made a good you made a very good point. You made very sorry, Seth, because I want to jump in. You
Please
made a
do.
very good point. I don't want to miss it. You know, what's funny is that during this time period when they're still buying, the bullion banks that are standing for physical delivery at the COMEX, like huge physical deliveries, or OTC, overseas, importing physical gold into the US, they actually don't want the physical gold price to go up rapidly, which is exactly what you just said, right? Why would they? They're still buying. So this is actually a very intricate operation that they're conducting that I believe they're having a lot of success because that's what you're seeing. You're seeing the gold price, it peaked a bit and then now dropped a bit. It's trading within range and they are still importing unless the inflows of physical gold have stopped in the month of February. I don't see any change to the situation. So I tell my followers on X, that's what you got to be looking at. Everything is just noise because like I said, paper volumes, paper trade, like as outsiders, we don't know exactly what's going on. But the physical flows, as imperfect as the numbers may be, we can get a good idea of what's happening based on the physical gold flows and also the delivery time duration at the LBMA.
So, and this makes sense, right? Because if the US is bringing all this gold back, it's in their best interest during the window where they're buying up as much gold as possible. It's obviously in their best interest for the price of gold to be low and to not be affected by all of their buying. But
In range, they don't want it to be like they don't want it to dump because if they're going to use the gold down the road, order the gold, use it, revalue the gold mark to market, they want it to be high, but before they actually finish getting enough gold back into the US, they don't want the price of gold to run up to, let's say, $3,200, right? They want it to be like caps in range, which is exactly what is happening right now. It's just in the range. It's in the box basically of 150 bucks up and down.
and so let's look forward a little bit and let's just say that they have finished this process or the fire truck is out of its fake water and the whole system starts to really unravel. And the US now has amassed this huge amount of gold, draining it out of the city of London, draining it out of other places back into the United States. At that point, let's just say that that this particular operation is over and the LBMA is on its deathbed and has lost its ability to manipulate these markets. What do you think the gold price would go to? Like once it's, I guess, more true or more accurate indicator of the real supply and demand of gold, and once it's no longer being manipulated by LBMA or by potentially the U.S. government, who wants to keep it within that box you mentioned during this buying
Okay.
spree, where could gold price go to?
Okay. So the annual gold mining production is around 3,600 metric tons. So that's all the mines combined all over the world. They produce 3,600 metric tons of physical gold. China at the SGE, which is the Shanghai Gold Exchange, it delivers 1,450 metric tons of physical gold to its civilian market. Why do I use that number? Because China doesn't really disclose its import numbers. It's very secretive. Okay, so we can only rely on the SGE delivery number of physical gold to the civilian market. So let's add another, let's say, 500 tons of physical gold imported by the Bank of China, which is the central bank in China. Why do I use that number? Because this precious metals analyst called Jen Gold on X, and he is very knowledgeable. He looks at the UK import-export market figures. He has documented that the Chinese central bank actually imports approximately 50 metric tons per month in the last year. So I'm taking that number, giving it a haircut, let's say 500. So altogether, China is importing 2,000 metric tons. India imports a net of 700 metric tons. So right there, Seth, that's 2,700 metric tons, right? And then
Which
if we
leaves
add
less
the
than a
US,
thousand for the rest of the world.
yeah, but let's continue with the story. The
Yes.
US just imported 2,000. Let's say I cut that in half. Let's say 1,000, but that's only 2.5 months. So if it doesn't stop, it's going to be at least 2,000 for the year of 2025, right? So let's say 2,000 for the US, 2,000 for China, that's 4,000. 700 from India, that's 4,700. The global, like the rest of the world combined, let's say 1,000. So that's 5,700 metric tons of physical gold that the entire world, let's say 6,000, because I haven't even included the rest of the world's central banks, which is, I believe, approximately probably 700, right? But let's take a haircut of that. And let's say the entire thing combined is 7,000 metric tons.
Which is double the
Which
mining
is
output.
double of your mining output, right? So what is the solution for this? The only solution is price. Price solves everything. The availability of physical gold is a function of price. So if you ask me, I think the US government is actually very ingenious. What it's going to do is probably going to audit the gold at Fort Knox, and maybe at the same time it'll do Denver, the Fed votes in New York, and West Point as well at the same time, because that's where U.S. government gold actually resides, the 8,133 tons that they say they have. It's not only at Fort Knox, it's at all these places, right? So they do the audit at the same time of all these votes. And then what's the next step after they do the audit? They would revalue the physical gold. And the way I see it, and I'm not saying it out of the blue because Judy Shelton actually said it. She said the US government is most likely going to revalue the physical gold that the US has, the 8,133 metric tons, mark to market. You might ask me, Seth, you might ask me, why are they, if they're revaluing it, why are they revaluing it mark to market? Why don't they just revalue it to like $50,000? Then the US government is rich, right? US government just, that asset is worth all of a sudden worth a lot more, right? Versus what is a statutory price at the US Treasury is right now, which is 42.22. Why wouldn't they? Well, if they do that, what happens, Seth? It means the US government have to print money because the US government is broke, right? The US government will have to print money to buy any physical gold that anyone would want to sell it to the US government for $50,000 to maintain the price of gold above $50,000. Does that make any sense to you, Seth?
Yeah.
Like if they were to revalue it to 50, right? They would have to buy it, right? Like to maintain it. But what if they do it mark to market? That's the natural equilibrium. The physical gold flows internationally will not change. So it's very unlikely that the US government will have to defend a mark to market revaluation of physical gold. That's why they probably would do that. And then after they do the mark to market revaluation of physical gold, what might happen? Well, did you know, Seth, that most of the world, especially the BRICS countries, the global south, they were already stacking a lot of physical gold as a alternative reserve asset next to the US Treasury bonds. You probably heard of that, right? I mean, that's what Donald Trump essentially is complaining.
Yeah.
He doesn't want these countries to get off the US system. So what will happen if the US is the last holdout to remonetize gold? If the US revalues physical gold and launch physical gold-backed US Treasury bonds, that means physical gold is remonetized in the US. Guess what? And like another important event that is happening this year. On July 1st, the US is going to start implementing Basel III. What is that, you might ask? Basel III would basically stipulate that physical gold in the US within the banking system to become tier one capital at a similar status, not similar, same status as the US dollar and US Treasury. Basically, pristine, grade A collateral.
Now that so gold one was gold became a tier one asset. That was back in 2019, right?
That's in Europe and London.
Oh, I
But
see.
US never implemented it. US implementation is this year, July 1st. So what I'm saying
Ah,
is that all this Donald Trump, dog and pony show about the Fort Knox, it kind of like everything fit together, right? Judy Shelton talking about the gold bonds. And actually, you might ask me what the heck is with these gold bonds, and I explained it in other programs in the past month, I guess, on and off continuously. Basically, what they are is Judy Shelton is proposing a zero coupon 50-year gold bond. And a lot of people say, well, zero coupon. Who the heck wants to buy zero coupon bonds? It doesn't make any sense because you don't get a yield, right? The concept is this. Somebody by the name of Jim Bianco, I don't know if you're aware of this fellow. Have you heard of him,
no.
Steph? No, he's the head of Bianco Research and he has DC connections. So recently he was on Macro Voices, this program on YouTube. And he explained that the Trump administration is thinking of forcing its allies to convert a large part of the US Treasury bonds to zero coupon century bonds. Like this is a way that the Trump administration is thinking of implementing so that it decreases its annual interest payments to the existing US treasury bonds that people hold, that countries hold. Why is that, Seth? I mean, you probably heard of it on the news. The US right now is spending $1 trillion US a year to pay for the interest on the loans that are written. It's more like they're spending more money on interest payments to the national debt, than what is it is spending on its military.
Exactly.
So they cannot. That's not sustainable, right? So if like Jim is correct, and they do this zero coupon bond, let's say the U.S. allies do only half of their bond holdings, U.S. Treasury bond holdings, converts it into these zero coupon bonds. That means the U.S. all of a sudden cuts its interest payments on the debt by 25% right there. Boom, $250 million they're saving. $1 billion, right? It's a lot of money. And they might save even more money if they convince the US allies to convert more of the US treasuries to these zero coupon bonds. But I think where Judy comes in is that if the zero coupon bonds are pure fiat, like the principal is fiat, whoever is holding those bonds is going to lose their shirt because they don't like they first of all they don't get a yield, and then the principal, if it's in US dollars, is going to depreciate to nothing in 50 years, right? So, adding the gold components to it makes sense. What that means is that let's say you buy that gold bond in 2026, and the gold weight equivalent is, let's say, 6 tons. You get 6 tons of gold back in 50 years. So you won't lose to inflation.
Makes sense. It's really
Right.
it's moving
Yeah.
away from the fiat system.
Yes, it is. Because the US Treasury system is no longer functional.
Yes.
Especially after they sanctioned Russia and froze Russian asset.
Yeah.
Like basically, the US has weaponized. You've probably heard this elsewhere. The US dollar and US treasuries, right?
Exactly.
The US can cancel. They can cancel any foreign country's paper asset, with a push of a button.
Yeah. Yeah. So, and how
So
can you
this,
expect to be the
yeah,
global reserve currency yet simultaneously use that as a weapon against countries that you're hoping will keep that as a reserve? It doesn't make sense. It,
correct,
it kills the system.
correct. So this gold bond thing is essentially a bridge so that the US part of the world, the US empire, so to speak, with its allies, can transact with non-US allies. Because the non-US allies are moving, like I said, towards a neutral reserve currency, neutral reserve asset, which is physical gold. Physical gold is borderless. It's not issued by any government. And if it's within your borders, it's yours. Like some people ask me, they say, well, there might be a lot of rehypothecation of the gold that is in the US. Rehypothecation, you know what that means, Seth? Or do
Mm-mm.
you want me to explain it?
Please do.
Oh, let me explain that. You heard of this fellow called Bugsy Siegel, right? He's a
Yes.
mobster in Las Vegas. So what did Bugsy do? He sold, he had this casino called the Flamingo. You probably know that. Everybody knows that. Flamingo, Bugsy Siegel. What he did was he sold the title of ownership of the Flamingo, the same title. Okay, so let's say the Flamingo title of ownership is divided into 100 parcels. So he sold the same 100 parcels over and over again to different people. That's rehypothecation. So there are multiple claims on the same ownership. That's what rehypothecation means. Does it make sense, Seth?
Yes.
Sure.
It, it,
Yes. Okay. So people are saying there might be multiple claims of ownership of the gold in the US. But my response is that it doesn't matter because if they ever did it, it's probably through a third party, first of all. So the third party is on the hook, not the US government. And the second thing is that who did they lease it out or sell it to? Probably US allies or like, third world countries, developing countries. US allies, they depend on US military protection. Look at Europe right now. Look at Ukraine. Third world countries or developing countries, who do they rely on? The IMF, right? The IMF give them loans, and the US has a lot of say within the IMF. Or they might borrow money from Western banks or US banks like JP Morgan, Morgan Stanley, etc. So they're beholden to the US in one form or another. So what I mean is that once that physical gold is repatriated within US borders, that's 99% of the battle won already by Uncle Sam. It's
that
finished.
makes sense. That makes sense. So this is very
Yeah. Yeah.
complex chess that's
Oh,
being
it is.
played.
It is. It is. And it's brilliant, right? I mean, look at this, Steph. Remember I talked about how these LBMA players borrowing gold from these central banks?
Yes.
And like you might ask, a lot of people ask me, why are those central banks stupid? They know what's going on. at the LBMA. Why they letting these LBMA members, bullion banks borrow that gold? Well, maybe a lot of these central banks are like Argentina, and Argentina borrowed a lot of money from the IMF, right? So they're beholden to the Western banking system. They are compelled to let the LBMA members borrow their physical gold. It is 4D chess, my friend. That's what it is.
I see. So, gosh, I feel like that I could keep going. I have similar questions, but we should probably wrap out because we've already only gone an hour and a half. When there's just
Yes.
so much information here. But I guess kind of summing this up, right now gold is at $3,000 an ounce. Gold in the treasury is valued at just over $40 an ounce. We've got massive
Yep.
manipulation from the LBMA. When all this changes and this massive geopolitical shift in the global financial system changes, what do you think gold is worth at that time? Is it still $3,000 an ounce, or is it gonna? I mean, yeah. What do I know that
I,
no one has a crystal ball, and this isn't investment
yeah.
advice for anybody. But what are your thoughts?
I think, they'll by the time they revalue gold might be above 3,000, maybe 3,200, let's say. And then once they revalue gold to 3,200 from 42.22, that's a huge signal for the market. At that stage, the US already repatriated enough gold into the US, and it probably broke the LBMA already, right? It's in the process of doing that. So at that point, they might just let the gold price run because the higher the gold price,
The better
the
for
better
them.
it is for the US, for them, right? So it might quickly, I don't know, run to 5,000, and then let's see what happens from there. That's my opinion, step by step.
Yeah,
Yeah.
interesting. And we didn't even talk about silver today, which is a whole other topic. But there's
Silver, yeah, there's a tightness in silver too, but silver is still T plus two or T plus three at the um at the LBMA. So I'm not really focused on silver right now because they still have enough. That fire truck still have enough juice in it to deliver
I see.
T plus three, right? Within 2 or 3 days, they can
I
deliver.
see.
So
I see.
so I'm not really focused on that. I'm focused on gold because that obviously something broke in gold, right?
Yeah.
So yeah, so I'm looking at that every
Well,
day.
also because gold is, I mean, it just seems that gold represents it's the center of this global financial shift. It's really hinging on gold, and silver is very much so a byproduct. Um,
Correct.
so, well, this has been really helpful. I've I've learned a ton. I've learned more from an hour and a half of this than probably 30 hours of reading articles and reading Twitter threads and all that. So I really appreciate your time. What's your Twitter handle so people can follow you, and I'll make sure that I put that in the description for the show as well.
Okay, well, you're very welcome, Seth, and my Twitter handle is King Kong 9888.
King Kong nine eight
That's my
eight
Twitter
eight.
handle. Correct. Yes.
Now, is that because you think that gold is King Kong? That gold is the king of all the beasts?
Well, no, because the guys who are silver stackers, they're my friends. They call themselves apes, like an ape, big
Oh,
ape. And I'm the king. I'm the king of the apes, so I'm King Kong. See?
that's
They
perfect.
call me king. When they talk to me, they call me king.
That's funny. That's great.
Yeah, yeah.
That's great. Well, I'm like a chimpanzee floating around somewhere, so I'm still part of that jungle. All right. Well, Eric, do you have any closing thoughts as we're wrapping up?
I think we're all good, Seth. I think if um, if your followers or your viewers, if they don't own any gold and silver, they might want to start buying dollar cost averaging as the bullion banks slamming the price of gold and silver. It's a gift, I guess. Especially if your followers in the US. I know that the physical gold and silver retail market in the US is heating up right now, but before this week, I heard that you were able to get physical gold and silver coins and bars almost at spot price in the US if you go peer to peer online. Like, I'm not talking about going to a coin shop, but
Yeah.
from other people who want to sell, right? So this might be a good time to buy at least a little bit of gold and silver to protect yourself for what's coming. So that's my final word.
Yeah,
Thank
and
you for
I
inviting me.
agree with you on that. That and that's things that I look at it as not a speculative investment, but more as an insurance policy, and that's my perspective on it. So, and you're right. I do think that even though gold right now is at nearly an all time high, that you make a good point in saying that there's a window that is keeping it at this price. That even though it seems like it's very expensive, in whatever time, if gold is now 5,000 an ounce or 6,000 or 8 or 10,000 or who knows what it could go to, you look back at this and it's like, gosh, I wish I could go back in time and buy gold at $500 an ounce and put away 100 ounces of it, right? So, um,
Correct. Yes.
yeah. Well, great. Well, Eric, thanks again for your time. I really enjoyed speaking with you, and I'll continue following you on Twitter. I encourage everyone else to. And yeah, thank you for teaching us today. That's what it felt like, and it was really helpful.
Okay. Well, thank you for having me on your show, Seth. Appreciate
Absolutely,
it. Have a
absolutely.
nice day.
Gold has surged 46% in less than a year, doubling the gains of the Nasdaq and the S&P 500. But this isn't just another rally. Global reserves are shifting, exposing cracks in the monetary system. Investors are losing confidence in paper gold and demanding physical metal, creating a massive gap between gold owed and gold available. But this isn't about how institutions broke another system. It's about how you can profit from it. Right now, Noble Gold Investments has a limited supply of investment-grade gold bars and coins available. As banks scramble to fulfill their obligations, pushing gold prices higher, you can profit. Smart investors are already moving into physical gold. Noble Gold Investments makes it easy for you to do the same. And right now, when you make a qualified investment, Noble Gold will add a free 10th ounce gold coin to your order. Don't wait until it's too late. Visit goldwithseth.com or call 626-654-1906 now and turn their panic into your profit. Again, that's goldwithseth.com or 626-654-1906. You'll find that information in the description for the show as well.